Hello, everyone. Can everyone hear me? Thank you for joining us for this session titled The Digital Revolution, Enhancing Cross-Border Payments in Africa. My name is Paschal Okeke. I head Operations and Expansion for CrissCross, a treasury solutions company that leverages blockchain technology to solve treasury issues across emerging markets, especially Africa. And I'd love to welcome my panelists of this session. To my right, actually all of them are to my right. To my right, Dr. Collins Igwe, who has a vast knowledge of this space in finance, 15 years worth of experience, currently the CFO at Budpay. Yemi, Lawani, a friend of mine, and the Director of Business Development at Circle for the MENA region, also vast experience. And now a friend of mine, Wainaina, the GM of Conduit in Africa, vast experience in this space. We're also waiting for our last panelist to join us, but we'll keep the conversation going. P.S. I didn't pick this panel session, but I'm fortunate to be speaking with a lot of my friends. So coincidentally, you guys are going to see me and my friends have a public conversation, if that's fine. All right. So if you guys permit me, we'll dive right into it. Now, basically, looking at Africa, right? The space we're operating in, which is African payments, are projected to increase to, I think, 40 billion this year, and 70% of that is going to be digital. But we all know in this space, settlement times are very long, fees are very high, and the big elephant in the room, which is what? Regulatory compliance and complying with regulation. And basically, that brings me to my first question, which I'll throw at Dr. Collins. Nice stuff you and the Budpay team have been doing over the years. And looking at cross-border payments in Africa, they remain super expensive. They usually range from around, 3 to 8%. What do you see as the biggest cost drivers, and how can we reduce those?
Okay, thank you. Good morning, everyone. So, if we want to look at the cost, I think let's look at it from two perspectives, within Africa and outside Africa. But one thing that stands common across both of them is the cost of moving funds around. So one of you talked about high fees. Is it fortunately or unfortunately, most of these remittance companies earn their revenue through the fees that they charge. And really what's built in that fee is the cost of moving money around for most of these companies actually a lot. So take example, within Africa, if you want to move funds from one bank to another bank in Africa, there's a very high transaction cost. Most of the banks in Africa are not connected directly through to SWIFT. So you find out that if I want to move money from Nigeria to Kenya, the money first leave Nigeria, probably go to the US through a correspondence bank and come back to Kenya. Even if you want to move, surprisingly, within the same bank, take example, you want to move funds from UBA in Nigeria to UBA in Kenya, you find out that the funds first leave UBA Nigeria, goes through the correspondence bank before it comes back to Kenya, and it's still within the same bank. So that high transaction cost, which the remittance company has to bear, will definitely be passed on to the customer. So one of the things that, we hope that will be fixed with future innovation is how to reduce that cost of transaction. Secondly, is also another reason why you have a high cost is the regulatory costs. If you look at remittance across Africa, each countries have different regulations, different unique regulations, so it doesn't cut across all countries. So if you want to register your company in Nigeria, you deal with the central bank in Nigeria, you deal with the central bank in Kenya, in Ghana, different hurdles to cross, cost a lot of money to, if you want to acquire. At the end of the day, it's expensive to play in these markets. And when you spend a lot of money, if you look at the previous panel, where he talked about having to enter the markets gradually because they needed to wait till they had enough funds to do that. Now, when you've invested a lot of money in entering the market, you would have to recoup that cost back. And how do you recoup that cost? Is the only way is also by increasing the fee so that it's enough to cover your cost and also gives you a reasonable margin. And also, another thing that also affects that is the liquidity in the market is also not very good for African currencies. So you'll find out that, just like I said, if you want to move funds from Nigeria to Kenya, you have to first convert your funds to USD before it goes to Kenya. And from Kenya, it converts from USD to Kenyan shilling. So you can't do a direct conversion from Naira to KES. So in each time you do that exchange, you are also losing value in the money, and that also contributes to the high cost of transaction. So really, it's just a cocktail of events, coming together, and we hope as we move further into that space, as things begin to change, we find a way to break that cost of moving funds around, which will definitely help reduce the cost of transaction across the markets.
That makes a lot of sense. And you touched on regulation a lot, which brings me to my next question. Welcome to the panel, Iheakachi. As someone leading global marketing and growth across Africa for Gray, expansion is something you have to do on a day-to-day basis, right? Coming up with strategies to open up new corridors, new currencies. So my next question is, regulatory fragmentation across Africa makes compliance super complex. How does this impact businesses, and what strategies has Gray adopted to solve these challenges?
Hi, Colin. Sorry, everyone. Sorry for being late. Before I respond, I actually wanted to speak to something that Collins was talking about. When you say it's hard to move money from, it's hard to move Naira, for example, like your example, right, Naira to KES, you have to go through USD first. Are you speaking about what happens like on the back end? Are you speaking about as an end user? Are you like?
No, what happens at the back end?
Oh, okay, I see. This is like a quick ad. You can move Naira to KES without needing to go to USD first on Gray. But to answer your question, regulatory challenges are something I think every fintech or everyone here who has worked in the cross-border space has had to deal with. I would say that we kind of think about regulators as the guys we should be scared of, and we should be concerned. If you hear that somebody from a regulatory body or agency is sending you an email, your first thought is panic, because like, what have I done? And what are they going to say that I've done, right? And that's, I feel first, we might need to correct that attitude, right? Across Africa, regulatory fragmentation, is a big problem. You find that each country has its individual licensing requirements. Each country has its individual compliance requirements. What this country needs for KYC and KYB is different from what this other country needs for KYC and KYB. And it's kind of hard to consolidate it in a way that you kind of get all this data from your customers without creating a lot of friction, right? So that's one big problem we see, right, as to how these kind of problems affect businesses. It's hard to consolidate every government/compliance agency's request into a way that the end user of your product is able to give enough information and understand why they're giving you that information in the first place. So I know for KYB at Gray, something that we do is we say, okay, so aside doing KYB for your business, we have to do KYC for you as directors, right? And then you're asking for some sensitive information, and you have people, even on the customer end, on the B2C end, in fact, you have people asking for, so why are you asking me for this information? This is like private data, why do I need to share it with you? And it's sometimes hard to communicate that, okay, so the government or where you're trying to send money from or where you're receiving money from kind of needs this data, right? And I think something that would help with dealing with this is, I would say, a unified regulatory framework. Especially around, let's say, data privacy and, let's say, compliance and licensing as well. I know the AFCFTA is something that's supposed to really help with that, and we've been working on that for a while, so I'm hoping that by the time it goes live or it comes to fruition, it's something that would really help with making payments feel less fragmented, because when regulatory problems happen, it means that, like Collins rightly said, the cost of moving money is more expensive on the end user.
All right, thank you. Yemi, before I throw my question at you, congrats on Circle's, on USDC's new all-time high. So my next question is, basically, fintechs building cross-border solutions often struggle with licensing in multiple jurisdictions. How do you think regulators can make it easier for these fintechs while still maintaining consumer protection?
Thanks, Pascal. Yeah, I think we want to touch on something that Kachi mentioned, right, which is sort of harmonization of different licenses across regions. So, if you look at Europe, for example, in many parts of, well, across the EU, if a startup is licensed in, say, Ireland, for example, right, and wants to launch in Germany, in many instances, right, they can just passport their licenses to the new jurisdiction, which makes it very easy to essentially expand, right, and makes it cost-effective for startups to move around and to innovate. I'm really encouraged by the sort of recent announcement by the governments of Ghana and Rwanda, whereby they're allowing for passporting of licenses for startups, right? Which allows, say, look, I'm a licensed startup in Ghana, I want to launch in Rwanda, I don't need to go through the entire process of getting licensed again, right? You might just need to fill out some supplementary information. And I think that is a real key, right? Because right now, you're a Nigerian startup, you've gone through that process, you're licensed by the CBN or whatever it is, and then you now want to launch in Kenya, and you have to go through that entire process again, which could take years and years and cost a ton of money, right? And I think, if we want to drive innovation across and harmonization across all of our regions, I think getting a sort of a unified framework, enabling passports, licensing, us to passport licenses across the different countries, I think that's going to be a major impact.
Awesome. Enough of regulation. Let's switch it up a bit. Eric, what emerging technologies, blockchain, AI, stablecoins, are currently underutilized, and how do you see them transforming cross-border payments in the next 3 to 5 years?
Thanks, Pascal, for making me wear my crystal ball. But so I think that's fairly broad, and we can break it down into all three. So the AI component, stablecoin, and the blockchain side, right? To me, what's most exciting about the blockchain side of things is you have a lot of progress being made. Yemi with the Circle team and a couple of other guys, a couple of other interesting companies globally are doing amazing stuff on the blockchain side of things. But then there's still a huge reliance on traditional legacy architecture. So the Swifts of the world, challenges with reliability, reliability not as much, but scalability at the very least. And so what I do expect we will begin to see is this sort of like hybrid model in a couple of years, where the money movement and the settlement side of things is largely powered by blockchain. But then the more traditional, more arcane compliance stuff that we were just talking about is now handled by the more sort of like traditional financial infrastructure that exists. Taking it up a notch and thinking about the AI bit of it, every single fintech right here, whatever she just mentioned and Collins mentioned, is dealing with issues around KYB, compliance, fraud. And so if there's one area that I think AI in our industry could play a very critical role is in that, so fraud detection. And a lot of these processes are very, very manual. I'm sure we all know there's a whole back and forth between you and a customer and you and a partner exchanging documentation. And so if AI can make this a bit predictive so that it's not a process that we have to consistently have back and forth, that it would greatly improve the user experience, which is, again, one of the challenges that has hindered really the deeper adoption of our technology in the space. And finally, just speaking about stablecoins, which to me is, I think, the most fundamental technology that has existed in our industry and likely going to fundamentally change it. I do think we will begin to see a lot more integration with traditional commerce, for instance. So users, when you speak to someone who, for instance, shops on Jumia, they do not really care about paying with stablecoins, for instance. But then we know, we as the industry and we as service providers do know the advantages and the value that accrues from that. And so what I do expect to start happening with stablecoin is more integration with traditional commerce, more embedded fintech sort of like solutions around it, such that the user, it becomes almost invisible, right? And so to me, I think that's going to be the major unlock that we're likely going to experience, particularly in the stablecoin node. And a lot more adoption from just, not just cross-border payments, but into more traditional commerce in a nutshell.
Awesome. Still sticking to blockchain adoption, stable coins. Yemi, adoption is growing on the continent, right? But we can see what's happening in regulation. What use cases are you seeing that are currently succeeding in cross-border payments? And how can adoption scale?
Yeah, I mean, so obviously at Circle, I mean, for those of you that don't know Circle, Circle is the issuer of the world's largest regulated stablecoin, USDC, and also ERC, with sort of MiCA compliant, licensed across the US, Singapore, and many other jurisdictions. So we sit in a very unique sort of position, right, where we see a lot of activity in the space, lots of different use cases. And so when we work with a lot of just licensed partners, and licensed partners in this space really want to work with sort of a regulated stablecoin. And so we see two primary use cases that we see, right? By far, at least across the continent, the biggest use case I see is cross-border B2B payments. I think we've talked about how it is, the sort of legacy systems are very slow. And you need to make a payment. You're working with suppliers in China. You need to pay your suppliers in China. And this is what, really interesting use cases like, our good friends at Conduit are doing, right? And of course, our good friends at CrissCross are doing is enabling these use cases whereby you don't have to, if I'm a business and I need to make a payment to a supplier in China, I don't need to sort of go through a bank, figure out how I'm going to find sort of US dollars, figure out how long it's going to take without any, sometimes you make a wire payment and you have no idea, no visibility where it is in the process, how long it's going to land. With sort of partners like CrissCross and Conduit, you can make that payment to China next day, right, or instant. And that is sort of revolutionary, and we see that, and that's why it's sort of democratizing sort of payments across borders, and so that's a big use case that we see. Another use case that we see is obviously on the remittance side, right? So you have sort of licensed remittance players sitting in across Europe, US, need to make payments out here, right? So traditional models of that require pre-funding, which gets really costly, right? And then you obviously go through a legacy banking system to send your cross-border cross-border settlements. That in itself could take several days, and obviously that has to cost time and has all these different implications. What we see is, you can instantly work with us, for example, right? You have remittance companies that will come to us, send us, you can aggregate their payments, come to us, mint USDC, and instantly it's on the other side of the continent, right? That cuts, 3, 4, 5 days of pre-funding costs, right? So these are, these use cases are the ones that I see that are, right now are sort of dominant and are really, really adding a ton of value to a lot of companies.
Awesome.
Sorry, let me just add something. So I think, just like you have said, one of the major challenges with when you do the pre-funding and accessing the funds, it takes days. When you get the telex, you have to follow up with the bank. The banks will tell you, oh, we've seen the money, we can't trace the money, we don't have it in our position, we'll get in our position later. Those delays affect your working capital for the business. So using stable coins, I mean, it's one of the very easy way to break that cycle. However, the challenge remains regulatory adoption. For example, in Nigeria, the CBN has said no. So I don't know how we can convince the regulators to leave it as an option, where you can do some of those transactions that way, because it's really going to make life easier for some of us.
I would just add, I would say, look, I think regulation is really changing across the continent, globally, right? So you've seen, obviously, sort of the big economies and the big regulators that are respected globally. We're talking about, Singapore, Hong Kong, the UAE. The US is actually going in that direction. We should see some traction very soon. South Africa has sort of clear regulations, and even Nigeria, that we talk about, has, is in that process. Has issued guidelines, has issued licenses to about 6 different blockchain use cases. And so I think we're going to see that change. It's clear, this is the direction everything is going. And it's just what regulators really care about is ensuring that they have visibility and there's compliance around the industry. And I think that's really, for us, we work only with licensed players, regulated compliance players, right? And we see that, that's working.
Awesome. Thanks for the CrissCross shout out, by the way. Let's take a move to financial inclusion and infrastructure gaps. Kachi, marketing, right? Financial literacy is a major barrier for adoption. What strategies have been effective from a great perspective in order to educate your users about digital payments?
Thank you, Paschal. So I would say you have to kind of take a multifaceted approach to financial literacy and inclusion. One of my favorite products, actually, is M-Pesa. And every time I come to Kenya, which has been a number of times, I'm usually let's take it back. The first time I ever, came to Kenya, I was so stunned at how they were able to pull off such mass adoption. It's like everybody, regardless of their educational level, understands how M-Pesa works. And I think it's so cool, maybe because I'm in marketing, because it's like you've cracked the code. Like you understand the most basic thing, which is you want to be able to take a complex concept and make it very simple that anybody gets what your product does. And from there, I think that's kind of how it's grown. And I think that everybody can take a learning from how M-Pesa has kind of grown. The best thing to do, or the most basic thing that you need to do when it comes to, making sure people are literate about how, let's bring it down to how your product works, is simplifying it. Cross-border payments, we're in this space, so we kind of understand, how it works. But a lot of people don't. People are asking, why is my money taking 3 days to get to me when I send it via SWIFT? People are asking, if I'm sending a crypto transaction, how is the other person getting it? How does it become real money, right? People have these questions, and the best way to do it is simplifying this approach, one, and two, building trust. I think on the consumer end, that's kind of like where the hardest amount of work is. You have to make people trust that your product is going to work for them and meet their specific needs before you're able to kind of see the kind of, you're going to be able to see the kind of adoption that you want to see when people understand how your product works. Another thing I would say would be utilizing community, which is something else that I think M-Pesa also, used. There is a lot to be said for the place of local agents in how products grow, right? So utilizing community is one of the fastest ways to build like a chain of people who understand how your product works and then passing down that knowledge to other people. I think this would be what I would say strategies that I think would help with financial literacy and inclusion.
Awesome. Thank you so much for that. That was super insightful. Back to you, Collins.
Okay.
Africa lacks a major or a unified payment infrastructure like SEPA. Would a single cross-border payment rail be feasible on our continent, or should we focus on improving regional aspects of payment infrastructure?
Okay. So when you talk about SEPA, that's I think a single Europe payment area. Yeah. So across the SEPA region, you can move money. It's like you're moving money within the same country. If we look at Africa, Africa has I think about 54 countries. Other than most countries have their unique currencies, other than the ZAF and the ZOF region. Most other countries, they all have their unique currencies. So it's something that's going to be difficult, or it will take a long time to achieve. I don't think it's something that you can achieve, even over the next 10 years, because they all have to come together to agree for that to work. They have different regulators in terms of central banks. They have different currencies. They have different banking institutions, the way they work. So coming together with something that will unify all of them would require a very good infrastructure and also require a long time to achieve that. What I think will be feasible in the medium term will be something like around the regional currencies and all that. I know they're doing something around East Africa, but I mean West Africa can come up with something like I know PAPS is there, the Pan Africa system solution or something that has not really been fully adopted, but over time we will get there. But I think we should start from regional blocks: East Africa, West Africa, South Africa region. Then when you have a strong regional, then you can now come together as one Africa. But if we say we want to build like one Pan Africa, it's going to take a lot of time. Yeah, it's going to take a lot of time.
I keep feeling that for this to happen, Africa needs to trade a lot more with each other. The more we trade with each other as countries, then the easier it gets to have faster money movement, right? For instance, right now, I am deeply enthusiastic about what the AFCTA will do for the continent and what PAPS is meant to do for the continent. But then up until Nigerian wedding vendors stop importing flowers from the Netherlands and buy them from Nairobi, and potentially Kenyans stop importing fuel from Saudi Aramco and do it from Dangote, that the more we trade with one another, the easier it gets, the more frictionless it gets. And so my sense is a payment fast approach is going to be excellent and it will come, but I feel a trade fast approach, that money movement, like the easier it will get for us to be able to build sort of like these composite structures on top of it around making it easy to move funds.
Awesome. And which brings me to my next question to you, Eric.
Okay.
What trends do you think will define consumer behavior in cross-border transactions for the nearest future?
I think on the consumer, the couple of things are going to happen, right? And I could be wrong again about what's happening, but I do think the one and most interesting thing that we should expect, particularly from around this continent, is more users wanting frictionless cross-border payments. Like I was mentioning before, a lot of invisibility, that I don't have to think about what platform I'm using, that I don't have to leave essentially the gray payment experience to go to another disparate payment gateway to make a single payment transaction, right? It needs to be very, very seamless. So I do expect that to be able to happen. But much more critically, like Yemi was mentioning previously, is regulatory clarity, right? So particularly around cross-border payments powered by blockchains. So I do expect that to also be a huge thing. And then inadvertently a very huge driver of whatever consumer behavior we get to see. So equally, I don't expect banks and traditional financial services players to just sit around and watch the cake being taken away from. So a lot of them are going to deeply adopt, actually driven by whatever their consumers are asking for. A lot of them are going to, again, work towards figuring out whatever we have in the market.
Awesome. Brings me back to Yemi, USDC, Director of BD. You do a lot of engagement on the continent, right? What do you think also is going to look like for the landscape in the next few years?
Yeah, I mean, I think for sure. I think I'm really interested. I'm very excited about sort of the PAPS network and see how that sort of helps in driving sort of intra-Africa trade and intra-Africa payments. I think that would make things easier. Though I come from a sort of financial investing background, right? So my background is in sort of private equity. And so one thing that really excites me is it's not necessarily a payments use case, but I think it is a cross-border investment use case, right? Which is around sort of tokenization of financial assets, right? So if you look at tokenizing money market funds, and I think that is going to be really interesting going forward. So if you look at interest rates in Nigeria, it's sort of in the high 20s, right? Close to 30%. And in other regions, say like in the US, sort of sub 5. You have a bunch of hedge funds looking for looking for investments in sort of higher interest rates environments. And so, I think there's, tokenization makes the carry trade a lot easier, right? A lot more. It's a quicker investment. It's easier to settle. So by combining sort of tokenized money market funds and stable coins on either end, I think that really makes it, going forward, I think that's a really interesting use case that I'm excited about.
Awesome, awesome. I think we've had a very insightful conversation, and I would like to bring the audience into it. So if there's anybody from the audience that has a question for the panelists, please indicate and we'll have a mic sent over to you.
Someone here.
Can we get a mic over to her, please? Is there a mic? Okay.
Good morning. Thanks very much for the discussion. It's been really interesting. Just my question is I'm interested to understand use cases around the triage of the use of funds, if it's a stable coin or, does it need to move into a blockchain framework, or can you do triage from a stable coin?
Eric, Yemi.
So I'm not sure I understand the question, but if the question is, can you go between stable coins and fiat currencies? Is that the
No,
question?
it's to understand how the funds have been used. So you've sent through the money. It's been maybe converted from fiat to stable coin, but you want to actually attach some conditions around the use of the money. And I'm just wondering, is that technical capacity available?
Yeah.
So in other words, things like, I'm going to say, aid and development. So making sure that actually it's been used in the way that it was designed to be used.
Yeah. So yes, and we see those use cases of this sort of purpose-bound money, right? And you have a lot of you see quite a number of businesses that have launched on this purpose-bound money, which essentially is, look, I am sending aid to you. You receive. So it comes from wherever to somebody in Kenya, right? And say, look, the use case for this is for you to buy food, right, from these specific areas, and you can actually program that into the system. And so there are providers that do offer that, and it's essentially purpose-bound money. We see that for different use cases. They use in aid, they use in sort of cross-border transactions in certain highly regulated countries and jurisdictions, whereby, look, if you're traveling, these expenses need to be only used for education, right? And so you can see that, and those are major use cases that we see within the ecosystem, and I think that would grow over time.
Awesome. Second question.
Thank you and good morning. I think, I'm not sure your name, but you mentioned going with a trade-first approach instead of a pay-first approach. But I wanted to get your opinion on two things. It seems like the technology seems to be easy to do. We've had conversations about regulation, which is catching up. But there's a fundamental issue of actual connection where supplies, logistics barriers, custom barriers, and for that particular, on the ground solutions. What are your thoughts on that in terms of how Africa as a continent can overcome that barrier? Because in terms of the technology, there's really no issue. Regulation is catching up. But then if someone orders, like you said, someone in Nigeria orders flowers from Nairobi, how are they actually going to get it? Because it seems like it's actually easier and cheaper to get outside of the continent in terms of logistics and the cost rather than getting on the continent.
And truly, that's what the AFCTA is supposed to fix, right? There exist so many high tariffs and barriers between African countries that practically make it impossible for countries to trade with one another. And so That's why we have all these interesting trade blocs, ECOWAS, COMESA, etc. And what those common trade areas are supposed to do is to essentially make the movement of goods, people, services very, very easy. And so if I were not doing what I do today, and I was a flower farmer, for instance, and I needed to sell my flowers around, my approach would be to look around, not just within the domestic market, but if I am Kenyan, what does the Common Trade Area Agreement around the movement of agricultural produce look like? What are the interesting and exciting markets that have, for instance, around me? If I do the same thing with for instance, with food, what do we produce here? What is needed in these other markets? I think it is more of the trader and the merchant's question to do that business development work, in my opinion. Look around, see what's available, what is moving, and then attempt to meet that gap. Because there's so much what government can do for us. There's so much what tech can do for us, but if the merchants don't explore these opportunities, then we'll keep importing from wherever we think the goods are easiest to find, or buy from whatever we think the goods are easiest to find. That's just a more fundamental thing than it is.
Yeah, I want to say something to that real quick. To answer your question as well, I think because we work in tech where everything kind of moves fast, we kind of assume that the traditional sector kind of moves that way too. It's going to take time, and that's the honest truth. I've sat in on a lot of panels where this has been the topic. Like, okay, so we're talking about these things every day, but when is it going to ever actually happen? It's going to take time, and the AFCFTA, coming to fruition is going to be something that will be a major marker in, us actually getting it done. So yeah, I feel your pain, I'll be honest. It sounds wonderful in theory. When is it going to get actualized? But I think we should kind of like adopt the mindset that we're kind of setting the foundation now for the generations to come versus, expecting everything to actualize right now. I think that's, gives you a little bit more patience when it comes to, seeing these things come through.
Awesome. Just because we're starved for time, we won't be able to take further questions, but the panelists are outside after the session and you can ask them questions. But yeah, thank you everybody. We've spent the last few minutes discussing the digital revolution, enhancing cross-border payments across the continent. It's been insightful. One thing is clear: to innovate in this space is not just about building shiny technology. There is strategy, identifying operational inefficiencies, and we've seen that, hey, we're in the right hands, as you can see from this panel session. We've been able to tackle challenges, we've spoken about strategy, and we've even looked into the future: AI, stablecoin, blockchain. But one thing is super important is Africa is fragmented. Borders are different nuances. Collaboration is key. I think that's one essential thing about ATS, the foundation of what this conference is about. Bringing people together, like minds, like businesses, collaborate, live the beautiful city of Nairobi, go build something nice, and in the next couple of years, we see exponential growth. So I implore every single person in this room, collaborate, keep the conversation going, and if you'd love to learn more about this topic, I actually co-authored a report a couple of weeks ago. You can meet me outside and I can send you a digital copy. But thank you, my co-panelists, for an awesome session, and I hope everyone in this room had a great time. Thank you.